What's up everybody? I hope you guys are doing well. Welcome back to the channel. For those that are new, my name is xzavien. I am a local Southwest Florida real estate agent. I help people just like you buy, sell, or invest in Southwest Florida real estate. In today's video, we're going to be covering the FHA 203k loan. We will talk about what it is and how it may benefit you as a future home buyer or someone looking to refinance a fixer-upper. Okay, so let's start off with what is an FHA 203k loan. A 203k loan, also known as a rehab loan, lets you purchase or refinance a fixer-upper all under one loan and paying one monthly mortgage. Next, I want to talk about how the FHA 203k loan works. This loan works just like any other typical FHA loan. There are some requirements that I will cover here in just a second, but for the most part, it is structured the exact same, but with a few modifications. Just so that I don't bore you guys, let's just break it down into 7 steps. Your first step is going to be finding a lender. Not every lender is approved to work with a FHA 203k loan, so what you're going to need to do is shop around, get some quotes, and make sure you're getting the best deal for your money. The second step is going to be applying for your home loan and getting pre-approved. With this, you will get a pre-approval letter, and with this pre-approval letter, you will be able to submit an offer on a home. So number 3, you're going to want to find a property. Of course, once you find a property that interests you, you're going to want to submit an offer, and in that offer, you're going to want to make sure you put language in there that indicates you need a 203k loan to close on the property. Step number 4, you're gonna find a FHA 203k consultant. This consultant will be in charge of putting together a scope of work. This will detail what needs to get done and estimate the cost. Step number 5 is going to be finding a licensed contractor. Contractor is going to write an estimate of the work needed and the materials required. With the 203k loan, you will most likely not be able to do the work yourself. That isn't unless you are a professional full-time builder or contractor. Step number 6 is going to be getting a home appraisal. Once approved, your lender will issue a home appraisal. One will be for the property in its current condition, and one will be for the property's value after repairs are made. Step number 7 is going to be closing the loan and starting construction. At this time, the keys will be handed over to you. This will now be your home, and any home improvements will now begin. After the home closes, the seller will get paid, and the rest of the money will go into a escrow account. The lender will release money to the contractor as work is done. So at this time, you may be asking yourself, what home improvements am I allowed to make with this loan? Down below in the description, I will leave a link to all the approved home repairs you are allowed to make. Depending on the type of repairs that need to be made to a fixer-upper is going to determine what kind of FHA 203k loan you will be using. There are 2 different types of FHA 203k loans. One is the 203k limited and the other is the 203k standard. They both vary in differences and also vary in allowance. One is more structural and the other is more cosmetic. Let's touch a little on the 203k requirement. So just like your typical FHA loan, as long as you have a credit score of 580 or above, you will only be required to put down 3.5%. And I just want to clarify, you're putting 3.5% down on the home price with the total project cost. So for example, you're looking at a $200,000 home and it's going to cost $25,000 to fix it up. 3.5% of $225,000 is $7,875. You can still use a DPA or a down payment assistance program to cover 100% of your down payment. The lenders are going to examine your debt to income ratio. This is going to be calculated by adding up all your monthly debt and dividing it by your gross monthly income. Typically, less than 43% of your income should go towards your proposed mortgage payments plus any other debt. For example, if you bring in $5,000 before taxes per month, your future house payment plus any other outstanding debt, whether that be a car loan, student loans, credit card debt, should not exceed $2,150 per month. The last requirement is what stops investors from using this loan majority of the time. You do have to occupy the home for at least 12 months. So if a 203k home loan isn't going to fit what you are looking for, there are some other alternatives. These options are more for somebody looking to refinance their home. To name a few, you could do a home equity loan, a HELOC, or even a cash out refinance. I want to go over briefly what are some of the pros and cons of a FHA 203k loan. Some pros include gaining instant equity in your home, dealing with less competition when purchasing a home, and gaining valuable home renovation experience. Some of the cons of a 203k loan are finding a reputable contractor that is willing to do the diligent paperwork, deciding on the repair repairs up front, and if they are within your budget, and the length it takes to close on a home. Alrighty, that is going to wrap it up for today's video. If you found this information useful, please make sure to like, comment, and subscribe. That is all for me. I will catch you guys on the next one.